JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 24th of February 2021. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, jumping into the charts, guys. So the first one I want to pick up here quickly is Nikkei 225. Yep, let me just actually jump into a daily chart. I was looking at the 15 minutes here, but looking at the daily chart, we can see that we continue to slide lower. So basically yesterday I've mentioned that if we get a drop below this little hurdle right here, this oh sorry, not yesterday the index was closed, Japan was closed, but on Monday what I was saying, if we get a drop below this little hurdle right here, the 29,847 territory, roughly around here, marked by the low of last week. Now that's where we could start looking at some lower areas, and as you can see, we are currently drifting, or should I say we were drifting lower because the index is already closed. But in a way, I mean, for now the direction is south. However, this direction south could be a temporary one if the index rebounds from this short-term upside line drawn from the low the 30th of October. I mean, it could be a temporary move south even if this upside line gets broken, because I mean, overall, we're still trading above this upside line here drawn from the low the 19th of March. So all this territory could be seen as a temporary correction, but I mean, that's a little bit further away. This could be a much larger correction, I would say. So for now, let's keep it short and simple. First, I'm keeping an eye on this upside line drawn from the low the 30th of October here, and of course I'm keeping an eye on the 21-day EMA together with the 29,519 zone right here, and of course this upside line. That's, for me, that's the kind of, these are the main concerns. I want to see how this is going to perform, and especially near the 21-day EMA, because let's see if it's going to do the same thing as it did here at the end of December, where this 21-day EMA did provide decent support. And then yeah, we'll take it from there, guys. Similar story here on Shanghai Composite. The index drifted heavily to the downside. As you can see, it fell below the 21-day EMA. It fell below this 3,587 zone. So yesterday, if you remember, I spoke about this this index here, and was saying that if this hurdle right here, the 3,637 territory, continues to somehow provide resistance, then yes, we could see a nice slide, and this is exactly what happened. A bunch of my levels have already been met. So for example, this one, the 3,587 and the 3,544 level. Although we overshot it a little bit here, but nevertheless, still a good result. Now the big question here is, can we see a reversal? Now, can we see maybe a rebound from this upside line here drawn from the low of the 19th of March? And for now, I'm gonna stick to the idea of seeing a larger correction unless we struggle to move below this 3,544 zone, because if we rebound from here, then we could see something similar that we saw here, for example. However, there is not much space here, to be honest. I mean, so it could easily test this upside line or the area near this upside line and then reverse back to the upside. So it could basically do something as it did here in the end of January and the beginning of February as well. So it kind of came close to testing this upside line, but then kind of reversed sharply to the upside. So again, there are a few things to watch out here. First of all, of course, we're keeping an eye on the 21-day EMA. And yeah, I mean, if somehow the price manages to get back above it, then we might not even see a test of this upside line. But if it continues to trade below the 21-day EMA, then yep, my next target will be this upside line. Now, jumping into German DAX, I mean, yesterday it closed in the red. It could have closed in the bigger loss, of course, but as you can see, the bulls managed to push this one back up, and once again we're back above this hurdle, the low of the 10th of February, and I talked about this in this 13,830 zone. I think, if I'm not mistaken, let me just quickly double check this here. Yes, so 13,830 zone. So I spoke about this level and I said that I need that daily candle staying below this. I mean, for the second day we had those drops here, those false breakouts, we can call them, because we had those drops below this level, but eventually by the end of the day the bulls managed to kind of push the index back up. So in a way, for now, what I'm gonna do here is I'm gonna wait, and to be honest, let me just have a quick look at the cash index. I mean, that should be quite interesting right now. So yeah, the price is balancing around the 13,840 zone. So okay, even not 40, 50 zones, or approximately around there, and we're basically still above this 13,830 zone. So yep, no good for the sellers, but not even good for the buyers, because we're still below the 21-day EMA. Let me just clear up the chart here a little bit, get rid of this line. It's kind of overcrowded a little bit, and I'm gonna probably take this one away as well. I'm just gonna simplify it a little bit. So we're basically still above the 13,830 zone, but below the 21-day EMA here. So for now, we're just again in kind of limbo, and we're just waiting here. For me, to consider the upside, well, I would need to see at least a push above the 14,026 territory right here. But still, of course, we do have this downside line, which could provide a hold up. But if it fails to hold, then yes, of course, a further push higher could be possible towards the all-time high near the 14,169, or even above that. But because we're kind of closer to the to this level here, this 13,830. Well, I mean, I'm going to continue monitoring this one. If we get that break again below this, yes, I'll aim for the downside, but I'll be very careful again, because we still need that daily close below this area in order to get a little bit more excited with the downside. DXY dollar index here, so pushed higher, and yep, this is why I keep saying to you guys that wait for certain levels to be broken before kind of aiming, let's say, for some higher levels. So for the upside, as I mentioned before, I need that push above this downside line drawn from the high of the 5th of February, and also I would like to see a push above the 91.05 territory right here, where that's marked near the high of the 17th of February. And yeah, then we could go for some higher levels. But for the downside, well, because we're kind of closer to this hurdle, I mean this 89.96 zone, I keep talking about this, and I would like to see a drop below this area, and not only that, I would like to see a daily close below this hurdle, because again, this could strengthen this way. This break could strengthen the idea of seeing further declines, where my next target could be this one right here, the the lowest point of January near the 89.23 zone. So yeah, guys, let me just quickly put the arrow here. I talked about this scenario already this week, so yep, just a quick, like I said, just a quick update on the situation here on DXY. Gold is, of course, still kind of floating slightly below, not floating, but trading slightly below this 200-day EMA. Yesterday we saw a push higher, failure to test the 200-day EMA, and then a drift back down. Today, this morning, we're seeing a push higher, and in a way, it seems like gold bulls are in anticipation of waiting for this. I mean, anticipation of a possible slide here in DXY. So yeah, gold here might push a little bit more to the upside, but we'll be very careful near the 21-day EMA, the 200-day EMA, and then we'll take it from there, guys. I mean, because even if it pushes above this, still there is a chance for the bears to step in somewhere near this downside line and drag this this commodity lower. Now jumping into WTI oil. So here the price drifted lower. We saw a hold up, although yesterday we saw a break first above the 62.25. We can see that this barrier kind of continues to provide decent resistance, and we didn't get that daily close neither yesterday nor on Monday, yep, now this could be a good indication that this hurdle is the one to watch for now, because if we do get that daily close above this area, then yep, we could just go for some higher levels. But if it struggles to overcome it, then, well, brace yourselves. Maybe we could see something like this here. So we could see maybe another test of this barrier, maybe even an overshoot here. But if, again, like I said, if it struggles to move above it, then another a slide here, a correction to the downside could be possible. We'll then aim for the 21-day EMA initially, but if that gets broken, we have this upside line drawn from the low of the 29th of October, which could be seen as a tentative one, but nevertheless something for us to keep an eye on. Bitcoin. So, Bitcoin, beautiful rebound. Yes, so this is what I talked about yesterday. So I said to you guys that wait for we had a nice break here, a break of this, yes, 21-day EMA, but we had a nice rebound from the upside line. Then my idea, what I mentioned, was that in a way, yes, we could maybe see a correction back up here, maybe even a move back towards this 54,075 territory, roughly around here. If it gets a hold up somewhere here, it might not even travel back to the all-time high here. It might go just for another correction here. So this could be just so a correction here within a correction. So basically this move higher could also still be seen as a corrective move here of a larger correction. So I mean, okay, I'm going to confuse you here. Basically, for now, let's keep it short and simple. Basically, the fact that it managed to rebound from this upside line and this and it's currently trading above the 21-day EMA, of course, this increases the chances for another possible move higher. However, if you want to be a little bit more on the safe side, given that we already kind of saw this morning a push higher here, and then kind of a retracement back down. So what you could do is keep your eyes on this 53 50,755 territory marked by the low of the 19th of February. And in a way, we could see maybe a push higher. Maybe if we get a break above this hurdle, then keep your eyes on these other ones. Now, don't say that this might actually go all the way here towards this 54,075 territory, but this is kind of one of those levels that I'm going to keep an eye on. And if you wish, I mean, we could draw quickly a Fibonacci here. Let me just find this Fibonacci. There we go. So, for example, to kind of try and see where this retracement here within this other retracement could happen. So, basically, you can see that, for example, right now we're just below the 38.2% retracement of the Fibonacci. So, if it overcomes that, we could go for this 50% retracement, which is roughly around the 51,500. And then we'll take it from there, guys. I mean, then we'll have a look what's happening here. Maybe it could go a little bit higher. Maybe it could go maybe somewhere towards the 61.8% retracement here. But again, be very careful. Long story short, guys, I mean, if you're not comfortable with this kind of trying to capture this little retracement here, then you could just stick to the fact that if we get a break of this upside line again, not again, but if we get a break of this upside line and we get a drop either below the 45,852 territory right here, or yesterday's low, which is around the 45,000, now that's where it could become a little bit more interesting for more sellers, guys. So keep your eyes on that one. Litecoin, very quickly on this one. So this one's a little bit looking worse than Bitcoin. We are now back below this 185.75 territory, which I kept mentioning several times. And of course, this now increases the chances for a further decline, because unlike Bitcoin, we still have a chance to reach this upside line drawn from the low of the 11th of December, which could provide maybe some temporary support. So again, let's see how this is going to trade. For now, seems to be that this 185.75 territory continues to provide good resistance. But yeah, again, guys, for now, be very careful. If we climb back above this and then push above the 21-day EMA, yep, I'll go for slightly higher levels again, but I'll still be very careful on this one. Now jumping into a few pairs, and just to kind of let you know, I mean, what's happening here today with the data. So we did this morning. We already got the Australian some wage price index, which came out better than the forecast. But yeah, guys, I mean, for now, I mean, the Australian dollar is kind of on the stronger side. It's pushing higher, but it's not stronger than the NZD. So, but again, I'll get to this point right now. But for now, looking at this picture, AUDUSD continues to rally, continues to push higher. However, of course, as you understand, I mean, we should be very careful with those further upsides. If you manage to enter somewhere here, let's say on the 0.7820 territory here on the break, then yes, good for you guys. I mean, you're probably nicely in the profit right now. But at the moment, let's say right now, trying to figure out where the next potential resistance area could be. Well, for that we need to kind of go and scroll here back to the 2018 basically, and here, for example, you can see that we have this 0.7988 territory, which could in a way provide resistance as well. Currently we're resting near the high here of let me just zoom in here a little bit, guys, up. So we're currently resting here near the highest point of March of 2018. And that's again roughly near the 0.7916 territory. So we're just slightly above it, but yeah, we're just kind of oscillating around that hurdle, the highest point of March 2018. If we continue to push higher, my next target is the 0.7988, and then I'll take it from there, guys. For now, I mean, of course, everything's looking quite positive, but don't get me wrong, at some point this will have to correct lower, but so far we're not really seeing that that kind of correction signal. Jumping into AUD NZD, you can see that Australian dollar is not the kind of, let's say, strongest one. We have the NZD, which is currently dominating its neighboring Australian dollar, and of course, looking at this whole picture, I mean, some of it worked out. For example, when I've previously talked about this idea that a further push above this 1.0776 could open the door towards the 1.0843, we just fell shy by a few pips of reaching that level, and as you can see, this is where we've reversed. Now, let me just clear up the chart here, this little mess, yep, let's see what we can have here. Basically, long story short, the first thing is, as you can see, we failed to reach the highest point of January near the 1.0843. We're currently seeing a bit of a corrective move here, but the reason why I'm saying correction, because we're still above all of its EMAs here. So I want to see if this is going to provide some sort of decent support. Of course, for now, I mean, the New Zealand dollar is on the stronger side. I mean, we did get this morning RBNZ interest rates, so those, I mean, no surprise there. I mean, they kept it the same. So yep, we can see that New Zealand dollar kind of strengthened on that news, and for now, I mean, although New Zealand dollar could continue strengthening a little bit here more, let's see if Australian dollar picks up the pace as well, and if so, then we could see a nice reversal here and a push back up. And basically from the technical side, you can see that for now, the big question here is, can this 21-day EMA provide some support? Looking at some levels here, some support levels, of course, the one to watch will be this one, the 1.0718, marked by the high of the 29th of January and the low of the 16th of February. So let's see if something like this will work out here. If, of course, this area gets broken, this whole territory up to 200 EMA here will be somewhat of a neutral one for me. But if we see a drop below the 200-day EMA somewhere around here, now that's where I'm going to go for some lower areas. And maybe, just maybe, if something like that happens, if this move like this happens below the 200-day EMA, maybe we'll just end up kind of forming here a possible range. But again, that's too early to talk about that. First, all eyes are on the 21-day EMA and this 1.0718. Quick update on NZDJPY. I mean, this one's on fire. It continues to rally here, as you can see, and of course now we're kind of searching for that next potential area of resistance, and one of those levels could be right here. Let me just quickly put it right here. Up, nope. There we go. Hopefully I can catch it. So did I catch it? No, I didn't catch it. Okay. Basically, there we go. So that's the high of the, I think that's the highest, no, that's the high of the 12th of December, guys, 2018. And that level is roughly around the 78.30 zone. So good potential target, something to keep an eye on. Of course, we do have the highest point of December of 2018, and that's roughly around the 78.86 zone. So long story short, for now, everything's kind of leaning a little bit more towards the upside. However, don't forget that we might see maybe a bit of a corrective move lower here. However, if you want to consider maybe the downside, well, if we by any chance this candle today drifts back below the 77.41 territory right here, marked by the high of Monday, that could be a signal that maybe not all is good here in the bull block, and we could see a bit of a retracement back down. So keep that in mind. USDJPY, quick update. Not going to spend too much time on this one, but everything's kind of working out nicely. Yesterday I talked about this, and basically what I said, that if we climb back above the 105.35 zone, then yes, I'll go for the higher level again. But again, for now, everything is kind of seems to be working out. So as long as it stays above the 200-day EMA, I'm kind of a little bit more on the positive side. GBP CHF. So this one is on, well, I mean, it's a monstrosity, I would say. I mean, this bull ride, this bull move, I mean, it's just insane. I mean, look at this. I mean, it's just parabolic. I mean, we have last time we had something crazy like that was back here in March 2000. Well, actually, yes, last year. Now the big question here is, I mean, can we? How far should I say? How far can we travel here? We've managed to overcome the February high, actually the January high as well. Yes, we also managed to overcome the highest point of 2020, and that area is roughly around the 1.2854 zone. So that's very interesting. So let's see if this pair can today in this week stay below the 1.2854-55 zone. If it can, then maybe we'll get that little correction again. But for now, I mean, it's just one-way traffic, guys. I mean, be very careful on this one. And finally, EURUSD. So here we're still keeping an eye on this idea, or should I say, I'm still keeping an eye on this idea of possible inverted head and shoulders pattern here, with the neckline being roughly around the 1.2156. And yeah, for now, I mean, we're not really moving lower and we're not really moving higher. So again, I'm still, like I said, I'm still kind of somewhat positive, but again, I need that confirmation break. I'm not getting it, so that means I'm kind of stuck here and I cannot really do much. So once we get that stronger move above this, then yes, higher levels could be met. We could maybe even target the highest point of January, but at the moment it is how it is. The same game plan, the same analysis remains. For the downside, as I mentioned yesterday, a drop below the 1.2023 territory is required, because at the same time we might see maybe a drop below the 100-day EMA and more sellers could join in. So yep, that's the kind of game plan. So guys, I hope you found it useful. Thank you very much for watching and listening. Thank you very much for your views and your likes. I really appreciate that. So yep, I hope you'll have a fantastic trading day today, guys. Stay safe, be very careful. Again, the market is a little bit on the crazy side right now, so it's trying to decide what it wants to do next. Yeah, let's see if we're gonna repeat last year's scenarios. So yeah, so that's a bit of food for thought for you guys. So have a nice day. Join me later on my traders tea time, 13:30 GMT. Thank you very much, and bye bye.